Welcome everyone to the Kendall Report. It is Sunday. Actually, I thought I would see if you folks are paying attention. It is Monday, and this is the video for Tuesday. So welcome everyone. Make sure you hit the like button before you leave, no matter when you came in. So let's go ahead and get into tonight's video. Very interesting, I think, after we went through everything that we saw last week with the Fed, and the Fed announcing that they're going to raise rates at least 2 more times this year, and the market rallies. And in fact, the S&P was up 2.6%, NASDAQ up 3.2%, and the Russell up 0.5%. It continues to lag, but year to date, we're looking at 14.8% on the S&P, 30.8% on the NASDAQ, and the Russell up 6.5%. So been a pretty interesting year. I'm going to show you something tonight. I'm so sick and tired of people talking about how just a few stocks are driving the markets. I've been telling you something, and I'll show you in a minute, but I've been telling you that for a while that housing was bottoming going back almost a year ago, going back into last fall. And as we came into the October lows and that whole fourth quarter thing, I've been telling you housing was the place to be. Back in the day when we had the live trading room, we built a ETF hack on home builders. And I'm going to show you the returns on that. And in fact, if you just ran the PortfolioXpert or Wavetech software on it, you are just a couple ticks under what the NASDAQ has done this year, up 28%. So, and that's on 35 stocks, and 35 stocks that nobody talks about. So I'm really tired of that. It's so funny how the weighted index world works, and even good friends like my buddy from Asset Capitalist, Hugh Hendry. I have to mention name Hugh. I know you watch every night. I'm just joking. But the reality is that folks have just been so wrong on this market. It's unbelievable. And what we're seeing is just people getting dug in on on the markets. And I think it's kind of interesting. I'll talk about this tonight. I think we're finally getting to a place where maybe we're going to see the market stall a little bit, give those people a voice for a few days, but there's still a lot of underlying strength that I'll discuss as we go through the presentation tonight. Let's talk a little bit the week after the Fed, right? So don't think it's the week after, because what happens, it's the book tour, the Fed book tour. So on go through the economics we have on tomorrow. We've got housing starts coming out, expected to be 1.45 million. But there's the book tour on Wednesday starts, and that will be Jay Powell and just about 3 or 4 other heads of the Fed, presidents of different banks are being talking on Wednesday and on Thursday. So we get double dose of Powell after the Fed meeting. So just expect that that's what's going to drive the markets this week. So comment by comment. So there'll be probably a little more volatility this week because nothing's planned out. Normally we talk about the maybe earnings events or economic events that are likely to happen. And that is what centers around what volatility, market movement, maybe market sentiment changing a little bit. This week it's going to be Jay Powell and his fellow spokespeople, we'll call them, promoting what they were doing last week. And it's interesting because if you look at what all the other central banks have been doing, we're seeing that everybody's following through on raising rates except for the Fed. They paused, skipped, whatever you want to call it. And as I've been talking about, I really didn't believe, I thought that they would raise rates. They probably should have, like everyone else, but I think they were using the backdrop of all the other banks to raise rates to keep that market sentiment there and at least a focus that they're going to be doing that. And once again, everything they've told us they're going to do, they have done. So suspect that we will get 2 more increases of yields this year. Let's take a look at some of the other stuff that's coming out. There's really, on Thursday, we get the typical initial claims, 255. Everybody's all excited a couple of weeks ago because it increased by 30,000, but then the continuing claims were down 30,000, but that didn't fit the narrative. So they paid attention to the one that did, which was the Fed's going to pause. And of course, markets moved up into the 44 handle. So everybody's happy regardless of what the news is. And I feel sorry for those that are operating in the news that is looking around the, through the rear view mirror. And it's kind of tough to trade like that, but that's what a lot of people do. So I'm just looking at some of my notes here just to make sure I cover everything. Yeah, I think I've got just about everything. On Friday, we've got the IHS manufacturing PMI. No one really cares about that number, but I'll mention it. Expected to come in at 48.5 in contraction mode. ISM is the number that almost everybody watches. And also, I'm kind of jumping around here. LEI, leading economic indicators. That used to be one of the biggest reports that we used to watch back in the olden days. And that is, no one cares about it anymore, but is expected to be minus 0.8. So let's go ahead and start to look at the database. I get to cover because everything's been run, and I can update you on the output of the database. And then we'll go through the normal show and see where we end up. So let's go ahead and take a look at that. All right, so we're looking at the output. This is the daily. Let me give you the weekly real quick since we don't get a chance to update. So it's at 62.84. This is one of those key numbers I talk about all the time on the database. Is 62, 68, there's a 70, 72 number. These are just numbers that have been developed over the last 25 plus years in watching this database. And these are key numbers. So we go over to the daily here. Let me update this. And when we go to the daily, we'll see we're now at 67.58. So right at that 68 number. The daily has a tendency to go into at least a 72, as high as 78. I've seen it as high as 90, but that's somewhat of an aberration from what's normal. So let's take a look at just a couple elements here. What came out of the system? So for Tuesday's open right now, there are on the intermediate 731 buy signals, only 89 sells. That increased the database from around 60 and change up to 62.84% bullish. And this is a good number, folks. We still looking forward on the weekly, are only satisfied about right now 24% of the look forward expectations of these models. So we're really early into this trend. I know folks want to believe we're at the end. We're not at the end. We're really very early. These numbers will get into probably 65 to 75% of the duration will be yielded. Right now, if we look at the average profit, is around 31%. Right now, the average profit is at 5.1%. So that means a lot of these stocks, in fact, 10,662 of them now are long, are possibly going to go up another 20+% from where they are right now. So, like I said, I argue that there's not just a few stocks driving the market. There are at least right now, 10,562 of those, probably about 60% of those, so 6,000 to 7,000 stocks are participating in this rally at some level. And I realize the nature of the indexes, and they're heavily weighted toward the top end of the stocks, and that drives the index weighting. But in a minute, I'm going to bring up the PortfolioXpert, and I'm going to show you this ETF hack that I did last year, actually, when I was talking about housing stocks and builders to come back into play when I thought that the residential housing was bottoming. And it's continuing to do really well in spite of a 7% interest rate on mortgages. So folks are starting to buy and starting to sell. And we'll get some other numbers as we come in on Wednesday this week. We get the existing home sales. So that's expected to be 4.28 million. So that's not nothing. There's quite a bit of activity in housing, and there's probably still a fair amount of those folks out there maybe talking about the coming real estate collapse. Remember those videos from last year? The collapse in real estate. It's 2008 all over again. The banks are collapsed. No, that's not wrong again. So we'll continue down a path of reality that I try to keep in this channel all the time. But most of the folks have been really, really wrong. But I guess they get more views than me because they're telling you a lot of folks what they want to hear. So let's take just a bit more of a dive into the database. And on the short-term basis, right now, the average duration is 12.6 days. Let me blow this chart up so you can see this a little bit. You can see over on the right-hand side here, this is what's fulfilled right now. Duration right now is 0.32. This is on the daily. On the average profit is 11. The average profit standard deviation is at 40. Current average profit 3.7. So we're still into that very 30 percentile range of what's expected to come out of this market. So from Bob Kendall's viewpoint, from Wavetech's viewpoint, from a modeling process been around for almost 3 decades that has done extremely well, it's not over yet, folks. It's still a lot to go, and there's still a lot of forward-looking type scenarios to continue to be focused in on. So while I'm on full screen here, let me bring up this PortfolioXpert. This is our product here. And what I've got on this chart, you can see I've got Trading Room XBH Home Builder Hack. So that's the ETF XBH. Check out, we go through and we look at the symbols that work good in our models and put them in there. So this is something we did last year, and let me just blow up this chart so you can see it. So the green line is the performance there. It's up 28%. The S&P is up 15%, which is the dark blue line. And these, if we go back 1 year here, you'll see a little different where the S&P was outperforming, but this is when I started talking about this, folks. October, November, down in this trough in the green line, this is where we started to put that possession on from the standpoint of owning these stocks. So you can see we go back just about 6 months. You can see exactly what's went on. We went from starting at a negative position all the way up to 28. So if you started this thing when I talked about it, you were in the live room, you built this portfolio out in Wavetech or in PortfolioXpert, this is what you're seeing here. And it's very interesting. Like I said, these are 35 stocks. If I bring this up, I can bring up the these are all the active symbols, probably a little small for you to see on your screen, but these are all the active symbols that are in there. This is the open positions and the returns. Out of all of the positions that are open right now, there's only 2 losing positions. Everything is just really, really rolling right now. And you can see what the entry dates were. Most of these came in on last summer, but if you look, they're all November 22, early in the year. A couple laggards here coming in, and 6-5 just new positions here. There's a handful here just since April. 1, 2, there's 4 positions that have come on. And the primary reason I'm showing this to you is that this just illustrates it. It's just a bunch of BS that everybody is talking about, how there's only a few symbols. Otherwise, if you don't own those symbols, you can't make any money. Right here, you can see that's not true. There's been a lot of them. And this is just one little segment. There's other portfolios that have been built as well in here that are doing quite well on the year. All right, so let's get into the normal flow. And I have been working a very long weekend working on getting the new indicators out. I know you folks are pretty excited about it, but I'm showing you a couple. I actually am adding a new PPM 4. You'll find out about that when it comes out. It's actually embedded in our 3.2 model process. But what's on the screen here is the hourly chart. We always go through this. The hourly chart is trying to roll over a bit, and we're seeing some downside in the markets. Right now, these numbers, I'm going to bring them up. These are what's called the Wavetech Trend Probability Indicator. It's telling you what the PPMs down here are telling you what the PPMs are saying about these moving averages and what the probabilities of this to hold. So right now, 61% probability we're going to hold this 21 period moving average right now. We've already low percentages that we're going to, we've already penetrated the 10. There's an 80% probability to stay above the 40 right now. So my expectation is that we should continue to see a decline. It looks like it's going to since I'm doing these videos so early on the day now, it's going to probably about, as we come in, I'm just looking at the time here, probably about an hour, once again, an hour before London or so is where this thing should start to bottom out and possibly climb along this line. And I left the projections here. These are also got the SMA projections here for the auto regression strategy, which everything flows together with the PPMs and is projecting out into the future what's going on. I know I thought I was going to get everything done. There were some programming issues. I probably spent 5 hours working on a couple issues here from to try to get these things out the door, but they're way closer. It's getting closer. Let's see. So we'll see what happens here in the next couple of days. But anyway, this is what's set up on an hourly basis. If we go over to the daily, let's take a look there. You can see right now that the moving averages are starting to fail a little bit. The PPM 1 is crossed to its first derivative. PPM 2 is about to. PPM 3 is still fairly strong here. Right now, there is a 46% probability that we will drop below this 10 period moving average. Right now is at 43.33. It's quite a bit under where we're trading right now. We're trading 44.09 at the moment, but it does look to me that we're going to see, and this is cash, by the way. I just realized. I apologize. I was looking at some longer term stuff, which I'm going to show you earlier, getting prepped for the show tonight. But this is the daily futures now. 55% probability to hold that line on the futures. So we still have that angle of attack still up. We still have that upward slope. We basically got a RTX sell signal the other day, and that is going to keep things in check for at least probably through today. Maybe we start to turn on Wednesday when we come into the book tour with the Fed, with Powell and all the other Fed members that are going to be talking. But this, generally speaking, we still have this upward configuration here, and that is likely to keep the markets at least above this support levels. And right now we're looking at 43.80, but that's easily, if you just follow the slope here, you're looking at the 42.15, 42.25 handle should start to hold. And if you just look at the market grid on the daily, it's over on the far right. It is right now probably looking at R1 is 44.86. I'll give you the numbers. So far we've been 44.62 on the downside, S1 44.56, 44.39, and that will move us toward this moving average, but we're going to stay above that. So I would look for R1, S2 for today. So let's do a little bit longer viewpoint, and it's basically mid-month, we'll call it, but I want to review just a couple things. I'll focus in on the S&P weekly for right now, just to go on. I'm going to also change this to SPX. So let's go with the cash, because there's some of this longer term stuff I want to show you. I'm going to need more data. So this is interesting because right now on the weekly, the probabilities of staying above the 10-period moving average are at 90%, 68% on PPM2 or the 21-period moving average. But there's very high probability that we're going to get this out there, and we did. I'm just looking here to see 43.97 was RXT. We did get an RXT close and sell signal above that extreme, so we're likely to see 1 to 2 weeks of sideways motion. We should trade right into this pattern. Now I left this thing for this a little long. I usually only have 10 sessions in advance. I put it out on 50 so you can kind of see at least what the algorithms are saying about the moving averages. We'll see how they update as we go forward. I think I'm going to keep this 50-day look. I kind of like to see what the averages are maybe going to do coming out, but this angle of attack is pretty substantial, and I'm going to draw something in because I want to tie together this. I want to tie together this patterns that are here, just so that we can get a better look there on this. So this whole pattern that I'm drawing in here, we've been talking about going back to over a year. That is the pattern that you need to watch for, because that's what's breaking out. All the folks, I love all the trend line people. They keep drawing trend lines, and every trend line is the next resistance line, fan lines, and that's just probably the most ridiculous way to do analysis, folks, to draw a trend line. I hate the trend lines. But one of the things that I want to point out here is with this angle of attack that we're doing here, we're probably going to come up and test some of these levels. I've been talking about some of the Fibonacci targets. I'm going to put them on the screen here in just a second. But those levels are something that we want to keep in mind. So let's go ahead and let's put the fib targets here. and I think these are important to keep in mind. The targets that I've mentioned these in the past here, and they are 42.39, which we've obviously done, 44.04, and then 45.06. So we're getting close to the potential of that 45.06 number. So far, we've been up to 44.48. So we've got one more level. I think we probably are getting into the range where we're likely to top out here, but we'll see how this thing sets up. And once again, just looking at these averages on a weekly, these are big. So we're going out to monthly next, and I thought that was this was an interesting viewpoint. And just looking at probabilities right now, the 21 or PPM2 only has a 21%, but 90% probability to stay above the 10-month moving average. It's down at 40.29. And this pattern is, I think, is fascinating, because up on top here is where these green dots, these are crazy numbers, folks. I've revealed these in the past, but 61, 18, 71, 21, and 77, 41. Now, this is a monthly chart. So how long would that take? That's a couple years from now. It's 24, 25. You're looking out, if you look at the scale at the bottom, you can see the years. For you to get to that type of pattern, you're going to have 18, 24 bars, at least 2 years of activity to get to those numbers. And they may just be one of those island projections that I talk about from time to time. So that is the whole configuration that's a little, I guess, big, maybe an island, but I always say every time I don't mention them, they come in, and I see somebody that's asking me to change the future bars to 50. We'll go ahead and do that, because that will match up. I know exactly what this will match up with what the moving average SMAs are being projected. So I'll go ahead and put those out there, at least for 3 of them. Bear with me a second. Might as well do them all. So what I just did was change the forecast, and this is showing how the PPMs are being projected to flatten out, and that's what the moving averages are doing. So these moving average indication, there's 2 of them on. There's the SMA projection tool. That is these are up here. If you look on the right-hand side, they're WTR, they're Wavetech auto-regression predictions. That's what all this is on the moving averages. There's one for each average. You folks are going to love this new indicator, because you can also put your own moving averages. I left the variables in, so now it will calculate the PPM relative to the moving average. So you can play with different moving averages. In the past, I've just kind of locked you down to Bob's way or no way. So, but these are showing exactly what these forecasts are doing. So let's keep going out. So this is what the monthly looks like. Now, this is the cash markets, but look, check this out. This is pretty amazing. I was talking about on the quarterly chart how that angle of attack was pretty powerful. Well, 90%, all of these things are 90% probability you're going to hold. But the key level, 4160, is that magical number, and that's at a 90 percentile range. And what's likely to happen, now this is quarterly, so this is going to be really slow. By the time we get 2 bars, it's going to be next year. So, but these patterns, as we look at them here, are going to continue along this upward slope. So ultimately, we're probably looking at the key support somewhere between the numbers that we already watched print, 42 to 43. And if we do get above some of these higher levels, now this is the cash market. If we get through the market grid, is 4608 is the extreme for this quarter. So that'll carry us in. Now, something that I've talked quite a bit about. Let me just come back on screen for a second because I want to discuss this. So basically, what I want to discuss with you is I've been talking to you about these longer term charts, and when I go into this long term mode, this is actually looking at these mega trends, and the mega trend on this quarterly chart that we're just looking at is likely to continue for a while, folks, and it's just not going to collapse. I think if you go with the election year type stuff, I don't think there's ever been a recession or major decline in markets. Somebody's going to prove me wrong, but that's okay. Put it in the comments if you know of one, but they're very isolated if they've happened. And there tends to be optimistic view on just about everything as we come into a general election. Now, maybe elections have been a little iffy in the last couple, going back to 16. Maybe there's not as much stability in there, but I just wanted to come up and just make sure that you understand that what I'm doing here and when I'm looking at these mega trends is isolating going forward with the algorithms and everything. We're just looking at, I hate to be this super bull guy, but so far that works. I wasn't super bullish last year. We were mostly in cash and negative. And I think after October, you folks know when we got the traction on the database, that's exactly where everything started to come together. And this whole scenario that I've been talking about for the past 6 months plus has unfolded. So let's get back into the technicals again. So the quarterly chart is this is a big deal. That's what I'm trying to tell you. This is a really big deal. Yeah, so I will interact just a little bit here. Somebody was asking, what about 2% inflation? None of those things actually matter. I don't believe. The Fed is, I'm not going to go into big Fed talk. I'll tell you what, I will address that here in the interest rates in a minute. So let's just kind of move on. Let's go on and let's go into NASDAQ. But I wanted you to have that kind of mid-month look. We've got all the way into September before we finish the third quarter. And I've talked about before that there's a possibility that maybe we top out in the third quarter. The way these charts are setting up, we're still very positive just looking at this quarterly chart going forward. So let's go ahead and take a look at the NASDAQ. All right, normally I don't go to the hourly charts here, but we are seeing some downward pressure here. Europe was down overnight. A lot of talk, the DAX just made an all-time new high. So Europe is doing a lot better. I'm trying to figure out where some of these bears are getting their sentiment and their feel from. It doesn't seem to be obvious. One of the things that's here, this hourly chart, we do have some Fibonacci targets on the downside that have been showing up for the past several hours. And they are right now at, let me get those forecasts, 1588, 15,005, and 14,954. That's down here. You can see that all of the moving averages have been penetrated here. This is hourly. Let's go over to daily. And you'll see here that we are down to the second derivative. It is forecasting a bounce here. And right now, there's still a 61% probability that we hold the 10-period moving average. That number right now is at 14,932, so that would put us down toward those fib targets on the downside. There's still a strong bounce possible, and you can see the algorithms are suggesting that this market is going to catch a little bit more of a bid, at least from a momentum. The angle of attack is going to stay in place, which tells you that that simple 10 moving average is going to be a point to look for a support, a bounce off of those levels. So expect that to be the case. Let's take a quick glance at the weekly since it's beginning of the week. We traded above the RXT. We did not get an RXT sell. We're still, look at this, 90% probability we hold the weekly, just like on the S&P, just a huge percentage probabilities here. And this is just continuing to be, I guess, what's driving this market. Look at this angle of attack. And I know we're going out 50 days, which is a little crazy to be forecasting out that far. But at least the next 3 bars, you're still seeing that angle of attack. I usually, like I said, I have this set for 10, but I think it makes sense to have it like that. So we'll just kind of follow it here. But these are big numbers, folks. This is weekly. So let's go ahead and take a look at the Russell. All right, so looking at the Russell, right now we're sitting right on the 10. There's a 60% probability we hold the 10 here. And let's see what the numbers are. Right now the low is, this is a daily chart, the low is 1887. We're looking at S2, 1889, 1878 is S3, and the moving average is 1886. So we traded just above that level. It says 60% probability. You can see that the momentum is starting to roll over. So we could penetrate and ultimately end down to this 21-period moving average. So I'll be watching this percentage probability map here going forward. Let's take a look at the weekly here. So in spite of, it is underperforming, but it made a pretty good breakout. Let's go to the weekly. Yeah, we got the percentages, but these numbers have to be changed for this index, so I'm not going to do that. But we still have these weekly Fibonacci targets on the upside. We're looking right now at 1994, 2103, 2170. Those are put us back up around these highs that were printing up here a while ago. Let me just get some numbers here. That high back in January was 2016. If you remember that Russell started off the year really kind of leading, and then leadership changed in a big way. But you can see that we're still in that sideways pattern. We still have some Fibonacci targets to look at on the weekly charts. Sticking with the weekly, going to the treasuries, this is a 10-year. We still have basically that range that I've been talking about. We're at a high of 85, 385, low of 668. I'm suggesting that we're going to stay somewhere above, we're going to round numbers off, 360, 385. We just consolidate along these lines. And PPMs are suggesting that that is the case from that pattern. If we go backwards here a little bit and take a look at the dailies, you'll see that dailies are very mixed, where we're likely to come down and test this line here. We're looking at around the pattern at 41% probability we're going to get through the 21-period moving average, get down toward the 40 from that standpoint. So just continue to expect to see this range bound on the 10-year. So let's take a look at the 2-year. 2 years got a little more positive slope. Right now, 78% probability we stay above the 465 on that level. Last trade, 475, 76 we'll call it. We should stay at an extreme here around 460, 475, 460 is going to be the range. You can see everything's flattening out. And I think ultimately, if I had to draw in what the expectations are, and this goes with the 10-year as well as far as the range goes, is here's what I believe we're looking at. You're probably looking at this box right here. This is where we're going to stay in that range I just talked about from that standpoint. That's just going to maintain what we already know. I don't see rates going up a lot higher at the moment or much lower. So stability going forward is going to be very choppy in the interest rates, but I think it will, in reality, it will supply a fair amount of backdrop for the markets to stay into a reasonably positive mode, not being affected by some of these outside forces. All right, so crude continues to bounce around in this lower 67 level. We came down almost to I guess we did print here the Fibonacci target, which was 67.36. We had a low of 66.80, and we bounced right back into these moving averages. Everything looks like it wants to move up back above these averages. They're very flat, and that's why the numbers are coming out at 39, 20, 27. So it's going to, when you get into this type of mode in the probabilities around these moving averages, you usually get some kind of trading range. So look more to the market grid from that standpoint, with RXT of 73.50, STX at 68. That's your really broad range for this week. We do have, interesting enough, we've got a typical situation where we have a upward fib target and a downward fib target. The downward fib target here right now is at that 67 level. We've touched that. PPMs are all turning up or being forecasted to turn up in the next several days. So if we look at the fib target 1, that's 74.83. That would put us up at the upper bounds of these targets from that standpoint. So this tells a little different story, and this gives you a better idea of where the resistance and support levels are. 200-week moving average is setting here, and that's going to be at the 67.39 level. That's where we pretty much held. We've got this downward sloping pattern here, but right now PPM1 is only at a 30% probability that it will stay below this, so we should start to run up into this PPM2, and which would put us around, I'm just getting you a value here, around 74, maybe printing up into that higher end range. And we also have upward and downward fib targets, and right now there's a slight bias in the next week or so with some upside, but there's going to be a lot of material resistance right here around this 70, we'll call it 74.50. A few weeks ago, we were around 75.50, but basically we're range bound in this market. Going to gold, just going with weekly only here tonight. continue to be sandwiched between the 40 and the 10. We did spike down last week. We got down to 1936. The 21 was at 1949, so we went just below that. And then 1989 was the 10-period moving average, and the high was 1985. So this week the range is narrowing a bit because the PPM1 is down, and you can see that the downward pressure now is in trend mode. So right now there's only a 24% probability that we're going, 43% probability that we're going to break above this 10. But you can see the PPMs are continuing to deteriorate. I still have a sense that we'll at least trade down to this fib target 1, which is going to put us at 1921, and then I'm still talking about the 1850 handle on gold as we go forward. It still looks like some downward movement. All right, so we'll go to Bitcoin. We'll stay with the weekly. Interesting because Bitcoin looks like it's trying to bottom here. And so we had that influence of that 21-period moving average coming in. It's at plus 0.59. Right now, I have to blow this up, see if I can get these numbers. But there is in here 90% probability for us to stay above that 40-period moving average. Right now, about a 72% probability to remain above the 26,348, last 26,751. And you can see here, it looks like the algos are about to give a pretty good sized boost where the angle of attack is going to turn back up. Whether this comes in, this is a little far out in the future to be predicting, but it does look like we've got stability right here around 25.8 to 26.5 is where that's coming in at. And you can see all the PPMs are trying to turn up, including the 200, which is in this upward slope here right along this vertical line. So we're basically climbing right along that weekly 200-week moving average. So let's take a look at the dailies. Have a new fib targets up here. We're looking at right now 27,330, 28,313, and 28,921 upward targets. PPMs are turning up. It looks like we're breaking above the moving averages, so they're very low percentage to stay below those because we were below them. So it looks like there's a pretty good chance, which puts us in to the ranges I was just talking about on the weekly charts. Okay, folks, this will do it for tonight's video. Appreciate it. Hope you folks like this earlier time. Gives me a lot of extra time to work on some other stuff. And like I said, I'm working very diligently on getting the indicators out, the new ones. I think the total suite, there's going to be 20 or 21 on total. And like I said, if you already bought them, I know some of you saw a number of sales come in this weekend, you will get a super discount off the entire suite that's coming out. And so if you've already bought them, we're working on where you automatically, we know who's in the database, your TradingView password, or not your password, but your username, your handle. We already have that. If it's in there, where you're going to get that discount. You know, the pricing, everything will be out. I thought I'd be done today. I'm really frustrated. I've spent, like I said, probably about 5 hours on some programming issues over this weekend that just derailed me from getting to the finish line here. So anyway, thanks again for watching, and If you are interested in any of the products that we do, you can go to Kendall Report/Wavetech and you can find out how to get into some of these ETF hacks. And we are revitalizing some things there. And then also, if you want the indicators, it's Kendall Report/indicators, so you can find out more there. And there's new videos, new everything coming out very, very soon, including a new masterclass for everything. All right, folks, thanks for watching. Appreciate it. Hit that thumbs up, and we'll see you tomorrow, same time.